Revenues and earnings for Apple, Microsoft and Alphabet have surged past already optimistic expectations as demand for digital services and gadgets continues to soar. Some analysts believe the earnings boom is ending as the global economy emerges from the worst of the coronavirus crisis. But with billions of dollars being added to their cash reserves, big tech appears all set to expand its market even further. Mobin Nasir reports.
The coronavirus pandemic forced many economies into lockdown, with people confined to their homes for months on end. That drove demand for social media platforms, online retailers, and other tech companies. Restrictions are now being eased, but big tech continues to rack up big profits. Between April and June, Apple's revenues shot up to $81.4 billion, comfortably beating market expectations of $73 billion. And company officials say sales of all products increased by at least 12% in each of the markets that Apple sells in.
Our record June quarter operating performance included new revenue records in each of our geographic segments, double-digit growth in each of our product categories, and a new all-time high for our installed base of active devices.
The Cupertino-based consumer electronic maker's profits shot up by 36% compared to the same period last year to $21.7 billion. And Google's parent Alphabet saw its bottom line beef up by an even bigger proportion. It earned $18.5 billion during the period, marking a threefold increase in profits over last year. The company says a rising tide of online advertising boosted earnings from ads by a whopping 70%. Meanwhile, Microsoft's quarterly profit also soared by 47% to $16.5 billion. The company's seen a boost in sales of software and cloud computing services for remote work and study. Collectively, Alphabet, Apple, and Microsoft brought in nearly $190 billion in revenue between April and June, which helped them rack up almost $57 billion in profits. That's 30% higher than market expectations and twice as much as their earnings during the same period last year. Despite the impressive results, Microsoft and Apple's stock prices are under pressure. Analysts say investors are concerned that the companies may not be able to sustain their high growth in coming months, particularly as the industry grapples with a shortage of microchips.
We've bought our home computers. We're now able to get out and about a lot more. So we're not going to have the same kind of reliance on tech. But another big issue that is really concerning investors is the fact with these huge numbers, it's going to start again calls for greater regulatory scrutiny.
For now, though, tech giants have significantly increased their cash reserves, and that's likely to help them sustain their success beyond the pandemic-induced boom. Mobin Nasir, TRT World.
More on this, Daniel Ives joins us now from New York. He's a tech sector analyst and managing director at Wedbush Securities. Good to have you back with us as always, Daniel. Some eye-watering results for these three tech giants. But as we heard there, we did see the share prices of both Apple and Microsoft come under a bit of pressure. Can you tell us why investors were perhaps a bit lukewarm despite these bumper earnings?
Yeah, I think, look, these were numbers that were almost masterpieces. I mean, I'll call them gold medal performances in terms of an earnings season. In terms of sort of investors shrugging the shoulders in terms of the reaction after the quarter, I wouldn't read too much into it. I believe these stocks are up another 10 to 15% second half of the year. NASDAQ 16,000, led by tech, led by large cap, because, I think what's important that you talked about is this a pull forward or just a new sort of norm? And I believe this digital transformation, it's a $2 trillion opportunity where the strong continue to get stronger in terms of FANG and big tech.
That's right, and one of those companies that really is going gangbusters right now and continues to do so is Apple. It's recorded the biggest spring quarter in its 45-year history. But it was interesting because CEO Tim Cook also sent out a bit of a warning. He said that the global chip shortage that's currently really hitting automakers hard is also set to disrupt some of Apple's production and supply. How much of an issue is this for both Apple and other tech companies that rely on semiconductors.
Yeah, and you saw that with Tesla. You've seen it with GM, Ford, and others. Look, I think Apple is being prudent in terms of the chip shortage, and it could impact supply by call it 2-3%. But let's be clear, I mean, the demand story going into this iPhone 13 is it's a jaw dropper. This is really a super cycle playing out. I'll call it a 2-year super cycle from an install base perspective. And I think as investors sort of digest and look forward, I think there's a re-rating stock. In my opinion, by early next year, we'll be looking at a $3 trillion market cap for Apple.
Yes, one of the companies that reported that doesn't rely so much on chips is Alphabet, the Google parent company. It saw its revenue also have a really strong quarter on the back of its core advertising business as more and more people flocked online during the pandemic. Do you think that's sustainable? Of course, the internet is here to stay. We rely on Google every day of our lives. But do you think it risks losing some of that momentum in its advertising business as more and more people emerge from lockdowns?
Yeah, it's a great question, but I think that the snapback demand is underestimated by the street. And I think this will continue, I think potentially early into 2022. Of course, it will start to moderate, but I think what starts to happen now is search and the digital advertising, that growth is really the scale and scope is even more than was baked into the stock. So I think what's starting to happen here is investors, even though the stock's up more than 50% this year, I think it continues to re-rate higher because of what's happening in digital advertising search. And let's also not forget about cloud. I mean, we'll hit on Microsoft, but you look at Google on cloud, that's just another sort of feather in their cap that they're having success with.
Okay, Daniel Ives from Wedbush Securities. Always great to get your analysis. Thank you.
Thank you.